Hello, this is Maj Soueidan from Geo Investing. We are here today with Yuval Taylor, fieldsonginvestments.com. And this is interesting. You're a quant investor, and we're going to get into that in a little bit here. You're recommended to me by some other quant investors. And the guy I got to interview, Kurt really talks highly of you. And so I really he's a great quant investor, so that really pricked my ears up. So let's get into this. Let's get into the terms and conditions really quick here, and then we'll chat with you, Kurt. You've all right. Here we go.
This discussion is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. This is not a recommendation to trade, buy, or sell any companies discussed. We recommend you consult with a professional investment advisor before transacting in any securities mentioned in this discussion. By viewing or listening to this event, you agree to the terms and conditions, which you can view in full at msmicrocaps.com.
So this is a really pleasure here to be here with you, and thank you for doing this. What's interesting, Yuval, is that I've been kind of getting into the quant side of things over the last year or so, trying to understand it a little more, wondering because that hasn't been really a big part of what I've done. And very qualitative in nature. So I'm learning about this as I talk to Kurt, Andreas, Carlos. I don't know if you know those guys.
Yeah, I know them.
Yeah, and I'm having interesting implementation, things to talk about. Maybe we can talk about later. That I'm trying to figure out, and we can talk about some of the challenges I'm having with some of it. But
Sure.
anyways, let's do that. But let's learn a little about you. So let's talk about a little bit about your bio, who you are, and I think you have an interesting journey here. And
Yeah.
I'd love to hear where do you live, your family life, and then a little bit about your journey here.
Okay. Well, I'm living in Chicago, South Side. I have a wife, two kids. Kids are gone. One's in Los Angeles, one's in Denver. And I retired in 2022. So did my wife. Retired early because we had enough money from my investing to make that work. I was in publishing for 30 years, left publishing in 2019, started to work for Portfolio 123 part-time as a product manager, and did that for about 2.5 years. And I was never really in the investing set. I have a very strong mathematical inclination, but I also have a very strong literary inclination. I love writing and editing. So I chose that path after college. And when you're in publishing, you don't earn much money. My wife was a professor. Both of us never got anything more than cost of living increases in 30 years of work. So we were just barely breaking even. So investing wasn't really a big something that I really thought about much because I just didn't have the basis for it. And then in 2013, 2014, we were on sabbatical in Bolivia, where the cost of living is 20% what it is in Chicago. And so I was wondering, well, what do I do with all this extra money that I'm saving because the cost of living is so low? And I thought, well, maybe I should start thinking about investing. And I started looking into ETFs, and then I just got obsessed. And I just spent every single hour of my free time reading about investing and reading about trading and stocks and accounting rules and that kind of thing. And I started putting my money to work, and I made every single mistake that novice investors make. I was following trends, using stop losses, you know, looking at stochastic charts, doing some technical analysis. I lost a lot of money.
Right.
I lost about 25% of what I had over 2 years.
Now,
Um,
was that before Portfolio 123 or after you joined?
yes, that was before Portfolio 123.
Okay.
Um, I I wanted to take a rigorous approach, a kind of something I could backtest, something that was somewhat scientific, and it was difficult for me to find a a way to do that until I came across Portfolio 123, and then things started to click. And by Halloween 2015, which was exactly 10 years ago, um, I felt like I had hit upon what was going to work for me. And the idea was um, to look at every single stock that I invested in from as many angles as possible. Um, the analogy is like a used car. You don't just look under the hood. You don't just look at the blue book value. You don't only look at what the previous owner did. You don't look only at product reviews. And you don't compare the price only to, I don't know, the price of a new car. I mean, you look at so many different things. So many different things go into your decision of buying a used car. And I felt like that's how you should deal with stocks. That's how discretionary investors, discretionary investors, value investors deal with stocks. And I felt like that as an algorithmic investor, someone who has a real preference for algorithms, someone who cannot make a decision without looking at an algorithm,
Right.
um, I felt like that was the way to go. Um, so the the thing that Portfolio 123 offered me, one thing that they offered me, which no one else had, was ranking systems. Now, when you screen for stocks, you can put in maybe three or four, five, six different rules to eliminate a bunch of stocks, and you can get down to a handful that you can look into more carefully. But when you're ranking, you can use hundreds of different factors. So instead of looking at one growth ratio, I can use 25 different growth ratios. Um, instead of looking at one or two value ratios, I can use a whole bunch. Um, I The quality of the stock is really important to me. I was using quality factors right away too. And then the other big innovation I came up with, which I don't think anyone else had done, was to use certain factors in a different way than other people do. And that is for certain growth factors, especially, but for a few quality factors too, is to use middling values as best. So a stock whose um, margin growth is in the 80th or 70th percentile is probably going to do better than one whose margin growth is in the 100th percentile. Part of that is due to the instability of a stock whose margin growth is in the 100th percentile. It's going to mean revert. Um, the same thing is true for there's certain other factors whose middling values are better. And the other thing I came up with was looking at stability factors that go beyond price volatility and beta. Those are very important factors, but I was looking at the stability of the company's cash conversion cycle. How stable are its receivables? How stable are its sales? Um, those things make a huge difference to finding quality stocks. So it really clicked for me back in 2015, and it worked. I made so much money those first few years. I was, making. I think I made 60% one year and 50% the next, something like that. 2019 was a bit of a tough time for me. That was a really overheated market, but 2020 I did really well again. So altogether, over these 10 years, I have a compound annual growth rate of 40%. So
Wow.
I
Nice.
made a lot of money. I was able to retire, and then in 2024, I decided, well, what's the next step? And
Right.
I started a hedge fund. So, and that's been a crazy journey. But
Right.
but now I've got a hedge fund. I'm managing 18 million and it's going really well. I'm up 42% this year. So
Well, awesome. How long has the hedge fund been around, Yuval?
since May 2024.
Okay. Okay. Cool. Cool. So you so you said it's been a little bit of a journey. So like the hedge fund, what do you mean by that? You're like you kind of
So the beginning, starting the hedge fund was really difficult. We went about things a bit. We didn't. The first thing you should do when you start a hedge fund is hire a lawyer. And everyone tells you that, and we didn't.
right.
So, um, and we paid for that. I mean, the hedge fund was delayed. We had to switch prime brokers at the very last minute. Um, we had a lot of difficulties. We wanted to create a fund that was friendly to IRAs, and that involves setting up a feeder fund in the British Virgin Islands and a master fund in the US. And that's quite difficult. You get into a lot of complexities. I am working with a partner named Scott Beavers, who's the COO, who I do all the investment decisions and I and I talk to our investors, and he does all the administrative and marketing and that kind of thing. So it's a good division of labor, and also, you know, it was a little difficult. It presented a few other difficulties too, even once the hedge fund was started and we got all the legal stuff taken care of. Because I had been using put options to hedge a little bit before I started the fund, and it had gone really well in 2022. But I didn't. I don't think I had the right mix when I started the fund. I think I had too many options and not enough stocks. And
Right.
so it hurt that hurt returns, and the balance of things wasn't quite right. Also, I invested a huge amount in European stocks at the beginning, um, and in 2024 the dollar just kept going up and up and up, and the Europe
Mhm.
so you know, the European stocks, even without any price movement in Europe, lost 8%. So it was, and I hadn't hedged my currency. I'm hedging my currencies. But so there was a bit of a steep learning curve there at the beginning. So it was a rough going.
Right, right. Excellent. It's a great background. So, did you join that? Did you raise that money at one time, or was it kind of? When you've only been around for a year and a half or so, but did that influx of money come right away, or did you have to build that money up? Did you start right away with like 40 million bucks, or was it?
No, I'm only at 18 right now.
Oh,
So
18. Okay, I thought you said 40. I'm sorry. Well, 18 is
no,
still big. That's still a big number
yeah.
too.
Yeah. No,
Um,
I started out with, I think we started out with 12 or 13. So mo almost all the money was coming in at the beginning.
okay, great,
Yeah.
awesome. So you definitely has some interest up front. So what I found interesting so far about what you talked about is
Hmm.
you like quality. I mean, that's one thing I think seem to like, but you
Oh
like
yeah.
where things are going though is what you're more interested in. So the trend.
Yeah.
So so would you look at like less quality companies becoming better quality? Do you find better value in that? Is that what you're kind of trying to say earlier, or in a roundabout way?
Well, no, I mean, quality is
Like, what is quality, right?
yeah, what is quality? I mean, basically quality is all the factors that don't fit into the other six categories that I have.
Right.
But basically, um, I mean, there are some things that are shared between quality and growth, but for me, I mean, I could just, run down my biggest quality factors if you
Sure.
know, um, let me just see, uh,
And then I
take me,
miss. Oh, yeah, how many factors you use in total? Is it
oh, around 200.
okay?
So let's see. Okay, what are some big quality factors here? free cash flow return on assets. That's pretty straightforward. Take the free cash flow, divide by total assets. That's a really good one.
Mhm.
Um, I look at I do use some accruals, factors. How are profits reinvested in growth?
So when you look at these quality factors, and I'll just talk while you're doing this, looking
Yeah.
for it. Are you looking for a baseline, or you look at junk getting better? Where you like say this is a horrible looking company, but it's moving in the right direction. Do you ever try and take that risk?
Yes, I mean, one of my major factors is a growth factor, which looks at sales acceleration or revenue acceleration, where a company that has um, weak trailing 12-month sales growth, but really high sales growth in the most recent quarter, that's a sign of a turnaround. So
Beautiful,
yeah,
beautiful. Love that.
so that's a good one. Um, so um, and then but the quality I guess I do think of it as kind of a baseline, and I look at a lot of stability factors too. So basically, yeah, there's some baseline stuff there. But the beauty of ranking systems is that if a company ranks poorly on quality but ranks really high on value and growth, then maybe it's still a good investment because you just weight the ranks and you take them all together.
Right, right.
You're not just screening out anything with low quality.
Yeah.
Uh, I mean, I do screen out certain companies, companies that have never made an operating profit. I'm not going to
Okay.
touch, you
Okay.
know. And then I use a revised version of the Benesch M score. Have you heard of that?
What's that?
It's a This professor Benesch, Masoud Benesch, published a seminal article back in the 90s, investigating which companies are likely to be manipulating their earnings, manipulating their financials. And he gave each company an M score. M stands for manipulation. And um, and I've revised that. I've done some research into it and I revised that. And if a company has had a high M score sometime in the last 3 years, I don't invest in it.
Okay.
So that gets rid of the Enrons of the world.
And I think you've written about um, red flags or fraud a little bit, right? Have you written about
Yes.
that?
Yeah,
Yes,
I
yes,
have.
yeah,
Yeah. Yeah.
yeah, yeah. Because I come from that background somewhat too, and like in the short selling days, we were looking at a lot of fraudulent companies.
Oh, yeah. Yeah.
And I wonder, like, right, and that's a topic I want to dig into. I want to come back to that,
Okay.
really, especially
Sure.
today's day. Um,
Yeah.
I did want to keep talking about some of your factors here to understand, because I love the idea of looking for these turnarounds.
Yeah.
Because to me, like it's coming from me from like a qualitative point of view, I look
Hmm.
for. I mean, qualitative I'll call them factors too, but qualitative, like kind of hints that things are turning around that
Hmm.
may eventually lead to the quantitative story getting better, right? I mean,
Right.
in the end, it
Absolutely.
all doesn't matter. In the end, it matters. What do the numbers mean?
Yeah.
In the end, that determines value, right? When you look out,
Hmm.
what are they going to earn and what kind of revenue they're going to make. So it all ties back to that. So one thing you had talked about, okay, looking for a company where they haven't had a good revenue growth for many years, and now you start seeing a trend maybe of increasing revenues, and of course it meets your other factors maybe. One thing we look for example, I'm wondering if you do this too anywhere, is we look for companies that have weak revenue growth, maybe even declining revenue growth, but improving margins, improving EPS.
Hmm.
And then we combine then we look at, okay, well, we read the story then. It's okay, well, okay,
Hmm.
why is that happening? Okay, well, they sold a division. So now I know they sold a company or a division, which is why it's low margin revenue sold off. So a lot of the screening tools will look at that. Oh, revenues are going down. We're not going to buy that, right? But you realize it's better quality revenue.
Hmm.
So I'm wondering, does that play a part? Is that another way you look at things too? Potentially, is that another one of your factors at all?
I don't think so because that would be hard to put into, that's kind of a story that's a bit hard to put into
Right.
one factor. It's something I could look into. I mean, I'm sure I could
But what
could
about what
write
about the
something
what
like
about
that, but it would be hard.
what about weak revenue growth plus positive EPS growth? That would be an
Yeah,
interesting factor. Maybe
Yeah,
you do it already.
that
I
would
don't,
be interesting. Yeah. I mean, and that's something that I could do. I could put together. I mean, I do look at when it comes to revenue, I do look at like I said, sales acceleration, but I'm also looking for stable revenue. I don't want to invest in a
sure.
company whose revenue goes up and down every quarter, you know, gyrates
Right.
wildly. So that's something else I'm looking at. Um,
An
and that's
interesting
pretty
company
good to know.
would be KEQU if you want to look at that one day.
Yeah, I've invested in them before. Yeah,
Okay.
yeah, yeah. Kiwani Scientific. Yeah,
Yeah.
yeah.
That's how that journey started, and now that they're actually growing revenue now,
Hmm.
they're hitting some issues with consistency. And now the stock
Right,
isn't doing as well. But
right, right.
most of the gains in that multi but from like $13 to like 70
Hmm.
was when sales weren't growing.
Yeah, yeah. That's right.
But EPS was.
But EPS was. Yeah,
Yeah.
yeah.
It's funny, right?
Yeah. I mean,
Um,
for me, the biggest growth factor I depend on is operating income growth.
okay.
So how that compares to, the most recent quarter compared to the same quarter last year. It's pretty rare that I'll invest in a stock that hasn't had some operating income growth.
Okay. Excellent. Yeah,
Yeah.
I think that ultimately you want to see some type of, either cash flow or income growth, whatever the model may be.
Yeah.
You
Right.
want that. Yeah.
Yeah. Yeah.
One thing I find that's interesting with a lot of these companies that we look for, and this is why I like to have a diversified portfolio, and
Yeah.
I'm assuming you have
Yes.
diversification going on.
Yes, absolutely.
And one of the things I like about diversification personally is it allows me to have some companies that I think are interesting quality, good quality companies.
Hmm.
They haven't quite inflected yet, but
Hmm.
we think they're going to at some point, right? And so you can get
Hmm.
some good prices. You can get some really good price on that, right? You can get them real cheap,
Hmm.
and they surprise you.
Hmm.
Yeah, that'd be to me that would be like how would I like define that? That would be a cool little thing I would like to portfolio I would like to create. These kind of
Yeah.
boring companies that haven't inflected yet. Am I getting signs that they are inflecting
Yeah.
in very early stages?
Yeah.
And these happen to be companies that I've looked from my experience that have been around for a long time, 30,
Yes,
40, 50
absolutely.
years,
Yeah, that's right.
and you're waiting for that change.
Yeah. I mean, I've been finding some of those. I mean, Conrad Industries is one of my biggest investments right now, and that's
Which one?
Conrad Industries.
Oh, Conrad, CNRD.
Yeah.
Yeah, yeah,
Yeah.
nice. Yeah.
Yeah. So I mean that one's gone up really nicely over the last year.
Yeah.
And last year it was the big good example was Power Solutions International, PSIX.
Yeah, we own
And
that
that
too.
you were on that too?
Yeah,
Yeah.
yeah,
That
yeah,
that was that was really nice growth on that
yeah,
stock, on that little company. Yeah. And you
yeah.
got to find these early. Another one I have high hopes for, but I don't know if it's going to happen. I've got a lot of money in D-Box Technologies, which is a Canadian company, DBOXF.
Yeah,
It's,
yeah.
it was selling for like 10 cents. Now it's up to 30 cents a share, but I think it's got legs. So
I know a lot of smart investors like that. I know Sebastian Krog likes that. I think Scott Weiss.
yeah,
I
he
think
likes that one too. Yeah.
yeah. A few
Yeah.
more. Actually, Scott Weiss is in Chicago, by the way.
Okay.
You should come to his next conference. He does it every summer. He
Yeah.
might we have a quant guy there.
Okay, good. Yeah.
um, yeah. So like so we I didn't touch on this yet, but you're mainly investing in smaller cap companies. Is that
Yeah, mostly micro caps, some nano caps, some small caps, occasionally a mid cap, but not much.
so
Yeah.
you'll invest in the OTC?
Oh yeah, and a lot in Canadian. I've got more money in Canada than in the US right now, I believe.
Really?
Yeah. Yeah.
Interestingly so. I know that there's some value in Canada, right?
Oh yeah.
But do they eventually get to the valuations of a U.S. company? Will they ever get to do they ever start getting to that? They are cheaper,
Yeah.
but do we ever see them get to the value like I'm talking about these value stocks ever
Yeah.
get to the growth multiple PE?
I don't know. I don't know. I haven't looked into that. I don't, I
Yeah,
mean,
yeah.
on
It is.
average, if you look at a cap weighted average, obviously the US is going to beat everything on that. But
Yeah.
yeah, but that could just be signs of an overheated market, and who knows what's gonna follow, right? You got to
Yeah.
take the long road, a long view. And I find that um, I don't know, I feel especially now, I feel much more comfortable having just one foot in the US, it
Right.
just it seems the stock market's so crazy here. The other thing we've been experiencing in the US is what we call factor inversion. I don't know if Curtis has been talking to you about that, but
What's that?
that is where the stocks that the stocks that have a high ranking in quality and value and stability are doing much poorly than the stocks that have low rankings in those factors. And that's been the case. That was the case most of 2024 and most of 2025. And there were certain periods where it turned around and everything was cool. But
Right.
and that is a US phenomenon. We have all these US investors who are just looking for the riskiest
Right.
stocks out there. And that's not a phenomenon in Europe and Canada.
Very,
So,
very interesting.
so it's much safer in times like these. It's much safer for me to be in US in outside the US. Unfortunately, with my hedge, which is put options, I can't buy put options on Canadian or European stocks. There's not the regulatory apparatus.
Right. Okay.
Uh,
Now, did that surprise you that you ended up in Canada more than the US? Or what was your intuition when you first started looking at
um,
the quant?
I think, well, what happened was I just found that the barriers to including Canada in your selection of stocks are um, a little bit artificial when you don't really know what's going on. F shares, for example, are just as liquid as the
Unconventional.
actual
Yeah.
stocks. They're just totally equivalent. You can just switch from one to the other. It just depends who's holding them, whether they're an F share or if they're traded on the Toronto Exchange. They have higher
Right.
spreads, but they don't have higher liquidity. Whereas most people they'll screen out over the counter companies, and they'll
Right.
screen out stocks that are priced under $3, and they'll screen out stocks with low liquidity, and then they have effectively eliminated the Canadian market. Um, so, so you once you learn that in Canada, penny stocks are not bad companies, unlike the
Correct.
US. In the US, penny stocks are mostly companies that are going bankrupt, but in
Right.
Canada, you've got plenty of stocks selling for 50 shares that are totally fine. Once you learn that F shares have plenty of liquidity, even if they don't actually show it. Um, and once you learn that even though they're traded over the counter, that doesn't mean that they're iffy, you
No.
know, then you
Yeah.
can open up a whole new universe of stocks to invest in, and that's what happened to me.
Yeah.
And so when I'm running my ranking systems, I'm just finding that a lot of Canadian companies are, I screen them together. I don't screen them separately. So I'm
Okay.
finding that a lot of the Canadian companies are ranking higher than the US companies.
How about the Hammond Power? That's a great, do not Hammond Power Systems, HMPDF. Remember that one?
No, I don't. I have. Oh,
Uh,
Hammond. Yes, Hammond. Yeah, actually, there's two Hammonds.
Or there's Hammond Manufacturing, right?
Right. There's
Hammond
Hammond
Power.
Manufacturing and Hammond Power. So Hammond Power was 3 years ago, was it, or 4 years ago that
Yeah.
that had this amazing climb, and I was invested in it the whole time, and I was so happy. It was my biggest position.
We had
So
it too. Yeah.
yeah, yeah, that was a great stock.
What was great
So
about that one was that if you bought it around 10, $13, maybe you got it around, I'm assuming you got it
yeah,
around there.
yeah,
And sitting here, this really established company
right,
selling as a small cap. I mean, I might even been a Meyer cap at the time with a PE of like 7. I remember this, right?
right.
And going through a manufacturing, a capacity expansion with like 4 quarters in a row good earnings, just sitting there still. And the thing is, like, is this thing that and it was like, is it blueprint kind of case study and what you want to see.
Yeah.
It's like, okay,
Yeah.
can you get this PE of 7 company eventually trading at a PE of 25?
Right.
Which it eventually did for a little, and the stock pulled back. Now it's come back up again recently because of
Yeah.
their data center involvement.
Hmm.
Uh, so
Yeah.
that's
I'm just looking at,
and that's Canada, by the way.
yeah, I'm just looking at, I bought most of my shares at 10.50 in March 2022, and then I sold a bunch of them at 43.68, most of them in July 2023. So that was a really nice run.
Yeah, I sold around with you too. I think at that same time. I sold.
Yeah.
Yeah, and
Yeah.
but then it went. Now the other one though, heavy manufacturing, is one
Hmm.
of these really frustrating ones because I don't own it. Well, do I
I
own like
don't, I
I think I
never
own
owned
a
that
piece of
one.
it.
Yeah.
They're cheap and they're
Hmm.
doing like some crazy numbers, but they never grow.
Yeah. Yeah.
And I'm wondering. I mean, if that's one of those ones that would like okay, those boring Canadian cheap companies
Yeah.
and their press releases have like a sentence or two, so you have no idea qualitatively what they're doing.
Right, exactly. And
But they're probably not.
there's
But
no
they're not going to go out of
analyst
business.
coverage. There's no analyst coverage, you know.
Yeah.
And you look at these, you look at these companies on Seeking Alpha, and they haven't had an article written about them in 5 years, you know.
Yeah, yeah,
It's
yeah.
just nobody's looking at them. Yeah, it's great. It's great.
Um, Something I want to talk about. I want to talk about fraud and psychology a little bit too.
Yeah, sure.
Maybe even come back to some of your strategies. There's a lot to unpack here, but let's talk about fraud. Our background at Geo, we spent some time between 2000 maybe 10 and 14 really uncovering fraudulent companies in writing especially these Chinese reverse merges that came here and went public, and
Hmm.
then that's how we started doing it, and then we got into like shorting like US pump and dump companies,
Okay.
and that worked out well. We had like 22 of those, but and so I want to understand your now what we would do fraud like forensically, right? We would look for inconsistencies in the numbers, but a lot of it was just invalidating statements, claims by the company, finding bad management teams.
Hmm.
But what I find interesting is you're like, are you able to like, how have you like, you measured it, like how successful you could actually identify fraud through a quant system? Have you done any of that at all?
I have not. Masoud Benesh, who published this paper in the 90s, did. I mean, he basically looked at thousands of companies and that had SEC had trouble with the SEC over earnings manipulation, and was trying to find out what they had in common. And he came up with 8 factors, only 5 of which really worked. When he actually did the empirical research, he found that 3 of the factors were pretty useless. And he did regression analysis, and all one of the factors is accruals measured by the difference between net income and cash flow divided by total assets. So total
Okay.
accruals to total assets. But all the other factors depended on change from year to year. So a company whose sales were increasing, huge sales increase from one year to another was a red flag for him, and if combined with these other factors was a good sign of manipulation. Um,
Interesting.
and so those are 2 of the 5 factors. The others are quite interesting. They're quite different from the other from. Let me just
Yeah,
Yeah, let me just see what let's see. I think the best thing to do.
and it was there. And what was did he write a book or a paper?
He wrote a paper on it, and then he's followed up with a couple other papers over the years. Um, and when I looked at this, I thought it worked pretty well, but there were some factors I had trouble with because they were unidirectional. And I thought, a big increase in such and such a factor was definitely a strong sign of fraud, but so was a massive decrease. Um, what happened to me was I got taken to the cleaners by tiny little stock called Tingo. Um,
Ah, Tingo.
you remember them? They
Oh,
were
I got a great story for you, but go
massive
ahead. Yeah.
fraud. Yeah.
Yeah.
Yeah, I got taken to they put out an earnings statement that just, all the quants like, it was kind of like an ideal earnings statement for quantitative investors.
Right.
Um, and they um, it was these farmers that were buying cell phones in Africa, right? Um,
Yeah.
and then, after I bought the stock, the Hindenburg report came out with a nice piece on what a bunch of
Yeah.
garbage this was, and the guy ends up in jail. Um, but that's when I realized that I have to really look out for fraud, and that's when I started reading Benesch, and I was looking at, okay, well, how does Tingo do on the Benesch M score? Um, and then I said, well, it does look kind of fraudulent on a number of these, but a number of these, if you reverse them, it looks even more fraudulent. And I started looking into that. So yeah, I wrote this piece in 2023 called Detecting Financial Fraud, a close look at the Benesch M score. And so he has one of his factors, for example, is days sales and receivables. He compares the ratio of receivables to sales in the most recent fiscal year to the same ratio in the previous fiscal year. And if that ratio is getting a lot bigger, it's a sign that the company may be overstating its sales. And that
Right.
makes sense, right? It's pretty good. But so what I said is if a company has a low score, it means it's decreasing its receivables compared to its sales, and that may be a good thing. But it could also be a sign that the company is desperately offering extended credit terms to customers, making sales to customers with weak creditworthiness, channel stuffing, or
Ah,
or recognizing revenue prematurely, which is the most important thing.
right.
So, in my research, I found that companies with very high or very low DSRI scores are suspicious. So,
Interesting.
that was how I, modified his score, to take into account some of these things that were, uh, different. And then the other thing I did is I looked at not just the most recent fiscal report, but I looked at other previous reports and just to see how things looked. And then the last thing I did, he did not really look at companies who were selling massive quantities of shares he didn't think of that as a big sign
Right.
for fraudulent
That's pretty
behavior. And
big.
I did, so I added that. So yeah,
Yeah.
yeah,
Tingo, one of the things we look for stocks with bloated share counts in the US
yeah,
at least. Um,
yeah.
it's not as big as a factor of underperformance in Canada, but
Mhm.
in the US, it seems to be a really big issue. And Tingo had a ton
Yeah,
of shares, I think, outstanding.
yeah.
The one it was crazy. But with Tingo, it was because I'm here in Puerto Rico.
Hmm.
I think it was maybe 2023, maybe, or maybe 22, that I met somebody here in Puerto Rico who was an investor in Tingo,
Uh-huh.
talking about how great the stock was, and talking my ear off. And right away, I said, "This is." I called I called one of my friends who's a short seller, dude. This is a this is not looking good.
Yeah,
If we were actually shorting stocks, this would be one we would like looking to write about.
right.
And I think Hindenburg came and did it, but yeah, it was pretty amazing. What's pretty amazing about Tingo is it had other signs too. I thought because when these companies that are like where all their business and contracts like overseas, like
Hmm.
Nigeria or Africa, all these places that they're Egypt. Sometimes we've seen is
Hmm.
that's you see a lot of fraudulent stuff go on in those areas.
Yeah, yeah, that's right.
I
Yeah,
think Tingo had that going on.
yeah.
But yeah, so that I know. And we have a zombie index we're making right now, which is trying to identify these zombie stocks,
Mm,
and their stocks all in small cap, the nano cap land that we think are going to go to zero, terminal zeros over time.
mm.
Um, Problem is you can't short them because either the bar rate's too high,
Yeah,
or you can be right but still wrong on timing on these things. They can pump.
yeah. So what do you, how do you make any money off of those. You can't really short them, and they don't have options. So, these
No,
tiny little micro caps that are just, that they're going to go to the bottom, but you can't make any money on them.
no, you can't. There's a few like there's some where you can do it. But you have to catalyze like activists can do it because they can catalyze it, right? They can talk
Yeah,
about it, write about it. Just waiting is risky.
yeah.
But what I use it for, I use the zombie index as my kind of market sentiment read. So when the
Oh,
zombie index is doing well, performing well, meaning that the returns are actually they're positive, like they're doing well.
yeah. Like now, right?
Sign it's a sign of a
Yeah,
peak.
yeah.
So that's all we've only been doing it for maybe 3 years now, and it's definitely called these tops. Um,
Mm,
and what's great about it too is that when the market's kind of calm, and the market's like a bull market, but a steady bull market, but not like outrageous.
hmm
You're making money in your long portfolio, and you're even
hmm
making money on the zombie. They're going down, but when you
hmm
have that last at the end of that bull or the end of I don't want to say a bull market, but like a bull period, the
hmm
zombies just go crazy. And you're probably getting to a top, like
Yeah.
the tariff time they topped out and they can't everything in it. So,
hmm
but it is
Right.
interesting to see, how they all play out. And, I don't know. Yeah, so having a short strategy would be really tough, I think,
Yeah.
because of some of the, you can be right, but be wrong on timing kind of thing. And the bar rates can
True.
kill you.
Yeah.
So I want to talk about psychology and because that's, behavior, biases. With a quant strategy, you basically take that away, right? That's
Exactly.
beautiful. That's
Yeah.
a beautiful thing about what you do,
Yeah. That's what one of the really nice things. Yeah. Yeah.
and
Yeah.
it's really tough. Um, as a qualitative guy, you know,
Yeah.
it's
Yeah. But
all
all
it's
your
all about
behavioral biases are constantly coming back to hit you on the head, right?
yeah. And there's
Yeah.
stocks I know I should sell, but I can't sell because of FOMO,
Yeah.
or
Exactly.
whatever it is,
Right.
right?
Yeah. Yeah.
So how many
Yeah.
stocks do you own right now? I mean, and yeah, what's a typical kind of number of stocks you'll own?
Well, let's see. Right now in my fund, um, and I've got most of my own money in my hedge fund. So right now I'm holding 66 stocks. But most of them a lot of them are really tiny amounts. So if for example, my top four holdings are all between 7 and 8% of the portfolio. And I think that if I went down to about 50% of the portfolio, there'd only be 12 or 13 stocks in the
Okay,
top.
wow.
And so, yeah, if we count just stocks that make up 1% or more of my portfolio, it's 25.
Now, have you seen those stocks surprise you? Sometimes they become the big winners, like those under 1%
Yeah,
companies.
occasionally, but they don't. I'd have to buy more, I'd have to increase my holdings in order for that to happen.
Now, are some of those wasted term because you just can't get a big position, or because of that's what the rankings are telling you to do?
Just what the rankings are telling me to do. So I'm using very different ranking systems for CompuStat data and for FactSet data. So if a stock is ranked highly on both FactSet and CompuStat, that's where I'm going to put my emphasis on.
Interesting.
Yeah,
So, fact set this portfolio 1, 2, 3 have both, or just only fact set?
they have both, but you
Really?
have to pay an extra huge chunk of change for the CompuStat data.
Yeah. Okay. And
Yeah,
what does it have? Do they have sufficient OTC coverage?
CompuStat, yeah, yeah,
Yeah.
it's pretty good. Yeah, and they have
So
very good Canadian coverage. So yeah.
better than FactSet, would you say?
No, FactSet has more coverage, covers more stocks overall, definitely.
Okay.
Um, CompuStat usually has more analysts, and I kind of like the way they. I don't know. There's a few other advantages they have, but they're a little slower processing earnings, and they definitely don't have the coverage that FactSet does. One of the nice things that they do have is very point in time backtesting, very point in time
Mhm.
data for backtesting, whereas FactSet revises their data.
Okay.
So,
And did you say companies has better estimates, better analyst coverage? Is that what you said, basically?
yeah, has slightly broader analyst coverage. Yeah.
Okay. And beautiful. Now, are you investing globally, or is it mainly North America?
It's mainly North America, but I do invest in Europe as well.
All right.
And then Portfolio 123 is about to offer Asia and emerging markets and Pacific data as well. So I'm hoping to do some investing in stocks in Hong Kong, Singapore, Australia, Brazil,
Japan?
Japan. Yeah,
Yeah.
yeah. Um, and a lot of it also depends on my broker, but I have invested in a few companies in Hong Kong and Australia.
Mhm.
So
How big do you think your fund could get? I mean, have you thought about that with liquidity constraints, and do you even care about that?
um, I I for the SEC is going to cap my fund at 150 million.
Right.
And I figure that with the kind of returns I'm getting, I'm going to cap it at 80 million, and I'm not going to accept any more new investments at 80
Right.
million because that'll still give me room to grow and without getting to 150.
Great. Have
Um,
you?
and in terms of capacity, in terms of the kind of illiquid stocks I trade in, I would just have to trade in smaller quantities in some of these really illiquid stocks, and but
Right.
I'm always figuring out ways around this stuff. And my transaction costs, I've figured out how to keep my transaction costs with my broker really low. I'm doing a lot less trading than I used to in terms of just going in and out of positions. That was very expensive. So,
But there is some turnover, I assume, in your portfolio.
oh yeah, there's
Yeah.
definitely quite a bit of turnover. Yeah.
Yeah.
I rarely keep a stock more than a year, but there's occasions when I do.
Yeah. I think that's turnover. Everyone talk long term, but turnover can really work really well.
Yeah.
You want to own these
Yeah.
stocks in the meat of
Especially
the
with the
cycle,
mic.
right?
Yeah, with the micro caps and nano caps, yes, absolutely. With large caps, mid caps, I don't really believe um that a high turnover really would benefit you much, but I don't know.
So where's your market cap out at? What's your top you'll invest in?
Well, it just I don't have a strict top. Let's see, right now, what is my biggest stock? Um, I guess I have some um it's three gold mining companies, Endeavor Mining, New Gold, and Oceana Gold. Those are all over 5 billion.
Oh wow. Okay.
Yeah,
Not
I've
not
done.
not not, not huge, but bigger than
Yeah, yeah,
small.
yeah. Endeavor Mining is almost 10 billion. So yeah.
Okay. Wow. Nice. Nice. Um, and do you use any type of algorithm trading? Is it all you're looking at the data and then making the moves yourself, or is any of this thing automatic? What you're doing?
No, I don't automate my actual trade placements, but I automate as much as I possibly can until I get to that point. So position sizing, all that stuff. Yeah, that's all. I have algorithms for all that.
Okay. And have you is AI any part of your process at all yet? And or do you even does it need to be?
Um, I've found AI to be so horribly unreliable that
Right.
I'm just moving away from it.
Yeah.
The best one I've found, at least recently, is Claude Sonnet 4.5. But it has made mistakes. I asked Chat GPT um, about I don't know 3 weeks ago to tell me, okay, let's say I'm looking at mining companies and I want to look at how do you translate this certain standard of gold mining uh, expenses into line items, CompuStat line items. And boy, did it make a lot of mistakes. It was unbelievable. And it was
Really?
like, yeah, I mean, it would have gotten a D in any accounting course. It was
Yeah.
just appalling what kind of mistakes it was making. or this morning I was saying, okay, I've got a bunch of puts on this one stock, and I want to reduce my position, and they're spread over the calendar, and they're spread over different strikes. And I thought, all right, I'm going to ask Claude which of these puts I should sell and which I should keep. And I had 12 different options, and I had a back and forth with it, and it never once asked me what the current prices of the options were. And it then at the end it said, okay, out of these 10 options, I would sell these five. And that's 12. You know, it's just
Yeah.
they're I just basically discarded everything it said, you know?
Yeah, I don't think I don't, yeah. When it comes from the numbers point of view and then the quant and it's horrible.
It's
You
just
can't,
horrible.
it
But
sounds so smart.
on the other hand, it did write me a Python program for extracting data that actually worked, or that I would never have been able to do myself. So,
Well, it's good. It's good
but
at that. It's good at that. Yes, yes.
yeah,
But when it comes to
yeah,
financial data, is just so messed up anyway, and
it is so messed up.
you can have you
Yeah,
can, you can have three platforms or three different numbers, so wherever it's pulling it from. I am
yeah.
curious if you actually had an API and you fed it only the APIs you trusted. I still think it would screw up, personally.
Yeah, I think so. I mean, it gets the simplest math stuff wrong. I mean,
Yeah.
I mean, AI programs are useless at questions like how many R's in strawberry. You know, they just
Yeah.
they don't look at the facts. They just look at what kind of language should I spit out to, you know. I had
Yeah.
this great this I had this great conversation with Claude not too long ago. Let me see if I can find it real quick. Um, I basically asked it, well, why doesn't Claude check its facts? I mean, why don't any of these AI people, why don't any of these AI programs actually check their facts? And it gave me this great analogy. Let me see if I can find it here. Analogy. Imagine someone who read thousands of textbooks while sleepwalking, then wakes up and can write essays that sound educated, but can't remember which book any fact came from or whether it's actually true. That's how LLMs actually work.
that's
So,
that's
yeah,
awesome, man.
yeah,
I do have a question for you though. I want to. I have three more things I want to talk about, and one
yeah.
is one will be hedging, one will be your, just your writing, what you like to write about, and you do that. And I have, but I want to lead with. So we talked about quantitative analysis, right, and that's how you do your strategy. Do you think there's a way you could score we could you could I'm not saying you, I'm just saying in general. Is it possible to make a system that scores qualitative factors if we identify them? Let's say we identified 20 qualitative factors that are like that identify turnarounds. Would that be useful to, like, for example, getting more sales from current customers? That's, more wallet share. That's one of my big factors. So if using AI to find those companies that are saying that, and marry that with the quant, do you think that would be interesting to have like a qualitative score too on maybe certain things we define, having AI read, you know, the earnings reports, the scripts to figure
Yeah,
that
I
out?
think a lot of investment firms are doing that now, and I think there is some value to it. Yeah. But what I think cannot be done, I mean, I think there still is, and I think as a qualitative investor, you totally agree with me, is that there is there's work that qualitative investors do that just cannot be quantified.
Right.
Um, I don't know if I don't know if you're familiar with a tiny little hedge fund called Bill Bell Capital.
I'm not. No.
All right. So they they have a 5 year uh 5 years CAGR of 138%, something like that. I
Wow.
mean, just unbelievable. And what they did is they put 100% of their investors' money into one Turkish stock.
No way.
Um, yeah, that's what they did for the first year and a half. and they said, look, we have not found any opportunities as good as this. But then
Jeez.
they started diversifying, and I think they have 5 stocks now. But I mean, they do that kind of incredible homework on every single company, and they are looking for companies that simply cannot lose, where
Right,
there's just the risk is completely eliminated because they are so horribly mispriced.
right.
And so the one US company that I saw that they were invested in until recently, I'm not sure if they're still invested in it now, is CareCloud.
Okay.
Um,
Oh, CCLD.
yeah, CCLD. Yeah. But and I've been invested in them, but the stock's not doing anything.
Right,
Um, but but their their analysis of CareCloud. I mean, and they provide the entire analysis in their quarterly reports, and all the quarterly reports are up on their website. And that kind of analysis is something that could not possibly be done in a quantitative way. I mean, they use numbers, but just they use numbers to tell the story of where this company is going, what it has done in terms of its acquisitions and its divestitures, and all that stuff that good analysts do. I think that stuff can work. I
right.
can't go there, but it can work. I'm totally open to that idea. I'm not like this quant who says, "Oh, all you discretionary investors, you got your heads up your asses," I'm not
Right.
like that. I'm not like that. I have a great admiration for what good uh, qualitative investors do. So, and
Now,
I don't think it can be duplicated.
do you think that as I see quant investing getting more popular right now on Twitter, yet you see a lot more of it.
Hmm.
Do you think it becomes more difficult at some point as more people get involved in quant investing to can keep with the edge, or have you thought about that at all?
Oh yeah, I
Like,
thought about it a lot. I think keeping my edge is going to be difficult. Yeah. And I think I've shared too much of my own strategies I should have kept my mouth shut and not written about it. And I saw on Portfolio 123 for a while, um, a lot of people automate their trading and then and the trades are made on Mondays. And you just saw this massive effect on the smaller companies that had good numbers.
yeah,
When massive amounts were being sold on a Monday because a new earnings report had come out.
right, right,
And it moved the price so much that if you waited till Wednesday, you got a much better price to sell.
right.
So I've seen that impact, and I've seen that more and more of these more and more retail investors are getting into this. But the the big institutional investors are not going to be investing in stocks like D-Box.
Correct. Yeah.
So
The thing is, there'll only be a limited amount of people probably doing, and I think a lot of microcap investors, most of them are all qualitative in nature. A lot of them are,
yeah,
and I think they'll always, and I think they'll continue to remain that way, especially because there's this evaluation of risk they really want to get into and want to understand
yeah.
management teams, these kind of things.
And a lot of the factor investing, I mean, the factor investing that AQR does and the other big funds is very basic factor investing. They're not combining 200 factors. They're using 20 at most. So it's very basic.
Jim O'Shaughnessy, he has a
Yeah, he's got
yeah,
his own fund. Yeah,
yeah, he's
yeah,
a quant guy, and I think quality is a big part of what he does too.
yeah. And he was a huge influence on me and major influence on me.
Great,
Works on Wall Street. Yeah.
great book. Yeah, we always
Yeah.
highlight his returns in our and when we're talking to trying to convince people, hey, you should invest in small caps. Well, look at his study. So it's great.
Yeah.
Um,
Yeah.
hedging. Are you hedging using the futures, or are you hedging sometimes against the using options on the stocks if they're available? How do you approach hedging in terms of even sizing the hedge too against your total portfolio? Those two, I want to understand those two things.
Well, I use put options on individual stocks. So, for example, my biggest bet right now is against SBET. I can't remember what it's called. Something
Best bet,
betting.
the
Yeah,
treasury
SBET.
company.
Yeah.
Yeah, yeah.
Yeah, yeah, the Ethereum treasury company, right? So yeah, so I I have puts on, individual companies like that. Um, and
No, yeah, we
so
said, but so we say hedge. You are not hedge. You're actually naked. You're buying puts against, but you don't own it, right?
right,
Okay.
I don't know they're
Okay.
naked puts, yeah. And so it's an alternative to shorting. I find
Interesting.
I find that it probably bleeds more than shorts do on a kind of day-to-day basis because the premiums are a little high. But when the market goes down, these stocks go zoom. These puts go zoom really, really beautifully. And I mean, I started doing it in 2022, and that was a great time to use
Right.
puts. Um, and I made a killing off of Peloton, for example, that year.
Right.
Um, so um, I don't know. And then in terms of sizing, I'm aiming for about 6% of my portfolio in put options.
Okay.
So a little more sometimes. And it has been pretty variable. I mean, I used to have a lot more, but it was really the premiums were really killing me. So
Right.
and
Right. So
also and
okay.
also we've been in this factor inversion in the US, and so that really hurts too. So I about 3 months ago, 3 or 4 months ago, I came up with an idea which I can't disclose to anyone of a hedge against factor inversion periods.
Interesting.
And it has done really, really well. So in this period it's so I think without it, my portfolio wouldn't be doing nearly as well. So I have that as well. So that's another hedge.
So okay, cool. Are you going to deploy more of your hedging to that strategy
No,
as
that
you
one I'm keeping like around 2%.
okay.
But during periods of factor inversion, it gives me really outsized returns. So
All right. So you're resetting your hedge, are resetting every month or every on a daily basis? How are you doing that?
about weekly,
You
yeah,
are doing okay, weekly. Okay.
yeah,
Yeah. And so when you look at these premiums though,
yeah. I mean
I mean,
the put had. I mean I don't keep it at like okay, you're getting like for the put hedge, I'm flexible. It can go down to 4%. I'm fine with that. It can go up to nine
sure.
percent. I'm fine with that. So and with the other hedge, it's even wider a range, like between 0.5 and 4. So I don't. So that keeps all the churn low.
Right.
But I do feel like I do need to rebalance them when they get out of whack, and you know
So
that's very important to do. And rebalancing these hedges can't rebalancing when you're using put options. It's difficult to get in and out of positions, and I usually just wait till expiration. And usually I'll buy the underlying and let it expire, and let the if it's in the money, I'll buy the underlying and have the automatic exercise.
okay, excellent. And I mean, I guess you're banking that there's enough volatility that at some point you'll make money in these. Is that kind of how you look at it? Like they're so volatile that you're going to get a chance to make some money, or at least
Yeah, I mean,
be
at least
partially.
I mean what I mean my entire portfolio is leveraged, right? If I weren't using leverage, I'm not really sure if I would use a hedge. But
Okay.
it really helps with these periods of downturns. So the first
Mhm.
quarter of this year, for example, the stock market went down what 16% or something.
Right.
And my hedge made our the hedge fund was positive that quarter, so was up like 3 or 4% that quarter, and that was in large part due to the hedge.
Wow. Okay.
So
Beautiful. All
yeah,
right. I think. Let me see. Yeah. So talk about your publishing. I mean, you still write now, right?
I still write. I'm working on another book, which has nothing to do with investing, and
Mhm.
I have been writing a lot of articles on investing. That's really slowed down right now. The one thing I'm working on is I want to write an academic paper, which I've never done before.
Mhm.
So that is a big challenge, and I haven't had much time to work on it lately.
Okay.
Um, so,
What have you written? So you have what have you written about in the past? I mean, before your investing days and now and during your investing days.
well, my last book was called Zora and Langston: A Story of Friendship and Betrayal, and it's about two Harlem Renaissance writers who met in the 1920s. Zora Neale Hurston and Langston Hughes. Um, they were the most important of the Harlem Renaissance writers. They really changed the way African American writing evolved, and they had this really fascinating friendship, very, very close, and then this terribly bitter breakup. So it was a very dramatic story, and I loved it. What I my ideal was to tell a story of real people based completely on facts without making anything up, that was as riveting and real as a novel. And that was what I tried to do, and I think it worked. I got some really good reviews, and I got some pretty good sales. So
Beautiful.
now I'm doing another story of friendship and betrayal, and it's about Lindsey Buckingham and Stevie Nicks, the
Oh, very
the
nice.
two main players of
There's
Fleetwood
a,
Mac.
there's a lot there.
Yeah,
Yeah.
yeah. And I just published on GQ Online a story of their early days. So,
Beautiful. And it's kind of like the friendship betrayal. That's like buying a stock and and breaking up with it.
yeah,
Same thing in the investing world. Uh,
yeah.
cool, man. So this has been great. I really appreciate you doing this.
Oh, you're welcome. It's been
And
really fun.
love to
Yeah.
have maybe have an update one day and see how things are going. Good luck in your fund.
Thanks. It's been
Um,
great talking to someone who knows all these stocks that I mentioned. Yeah.
we could go on for 3 hours, buddy. No, no,
That's
no.
right. Yeah. Yeah.
Cool. So we've been here today with Yuval Taylor,
Mhm.
and Field Song Investments. Um, where can people find you?
We've got a website, fieldsonginvestments.com, and that's got a contact button in there.
Are you
So,
active on Twitter at all?
no, I'm not active on Twitter, but I am active on LinkedIn,
Okay, cool.
and
And
I do a few posts, and so you can always contact me via LinkedIn.
beautiful, beautiful. And yeah, I'd love to see maybe pick your brain on some topics to write about when you have some time on the investing side of the world when you get back, do that again.
Okay, sounds great.
I'll talk to you. Thank you so much.
Okay, thanks, Maj.
See you, man.
Take care. Bye
Bye
bye.
bye.